You might be wondering what a conflict happening thousands of miles away has to do with your ability to buy a home here in the United States. The connection is more direct than most people realize, and understanding it puts you in a much better position to make a smart decision right now. Here's how the chain reaction works. The conflict with Iran has pushed oil prices higher. When oil prices rise, the cost of transporting goods, manufacturing products, and running businesses all goes up with it. That feeds directly into inflation. And when inflation rises, or even when markets fear it might rise, the Federal Reserve holds back on cutting interest rates. Here's why that matters for you specifically. The mortgage rates had briefly dipped below 6% for the first time in over 3 years. That was a meaningful milestone. And that brought a lot of buyers back into the market and created real momentum. Then oil prices spiked, inflation fears returned, and mortgage costs jumped back up. The mechanism behind that move is the bond market. Mortgage rates follow the 10-year Treasury yield very closely. When investors get nervous about inflation, they sell bonds. When bond prices fall, yields rise. And when yields rise, mortgage rates rise with them. So the sequence looks like this. Oil prices go up, inflation fears increase, bond yields climb, mortgage rates follow. Your monthly payment goes up. That is not a story about politics. It's a story about how interconnected global markets are and how quickly something happening overseas can show up in your housing payment. So what do you actually do with this information? First, understand that rate volatility is real right now and build that into your planning. Do not assume that the rate you see quoted today is the rate you will have in 60 days. Second, talk to your loan officer about rate lock strategies. Depending on your timeline, there are options to protect yourself from upward rate movement while you are shopping for a home. Third, explore seller-paid rate buydowns. In a market where sellers are already making concessions, you can negotiate for the seller to buy your rate down at closing, which offsets some of the impact of rates moving higher. The buyer who gets frustrated right now are the ones watching rates like a scoreboard and waiting for the perfect number. The buyers who win are the ones who understand why rates are moving, plan around it, and use every available tool to make the deal work. If you want to talk through what current rates mean for your specific budget and how to structure your purchase to protect yourself from volatility, send me a DM and follow me, because the market shifts like this, being informed is your biggest advantage you have.